Hey, what up, ICT fam? We're going to do a quick video today on the Fib tool and how to use the Fib tool with its projection settings to give us price targets as to what we're looking for and where price is likely to head and how far it will move above the range we've created with the Fib tool. If you look at this chart right here, this is ES, and I have marked out the August highs, the October lows, and this is the daily. We've been trending up. I took the Fib tool and I took this swing low right here and this swing high, and you see we had a nice consolidation in this optimal trade entry. ICT talks about looking for optimal trade entry within this 62 and 79% retracement. Okay, so we had a very nice consolidation in this area and we're expanding up and out of it nicely. So we're going to take a look at this level, this range right here on a smaller time frame, and we're going to use the Fib tool to show us how we can find projections as to where price is going to move into the smaller PD arrays that are going on from this area moving on up. So here we have the 1 hour chart. I've marked out the Fib lines that we drew on the daily. The purple lines are going to be your 79% retracement and your 62% retracement. You can see this was the daily consolidation. 50% is your equilibrium level, and this was the swing high that we used to create the range starting at the top, and then we have our range that was created at the bottom. That's not pictured on the screen right here, but I just want to show you how when we put the Fib tool on the chart, what we're doing is we're creating a range, we're creating a PD array. As you have premium, everything above equilibrium, and you have discount. So as you can see, we were consolidating in discount, which we would expect to have a move bullish, moving out of discount into premium and creating a new PD array. As we just kind of scroll across here, you can see that we broke above the previous high and we're starting to get into the next PD array. So we'll go down to the 15-minute time frame and we'll see how the Fib tool can help us with projections and moving on to the next PD array. Alright, here we have the 15-minute time frame. I've taken you to January 6th, which was a non-farm payroll last month. We had been consolidating in this range for a while. This is a high impact news event, and this would be likely for the algorithm to use to reprice higher and start moving out of that consolidation range, which you can see it does. So here I have the Fib tool. We have the news opening right here, the news embargo at 8:30 New York time. Releases the non-farm payroll data. Huge move up, okay, creating a swing high. And then as New York open happens, we create a swing low. And then we want to know how much higher is price going to go above this swing high that we created. So here's our starting point. We have this swing low down here where we took out sell side liquidity. News created a swing high, and then it comes back down here into the optimal trade entry. So it creates a swing low. Because this is a high impact news day, price is extra volatile, so we get a very deep retracement balancing this BISI that we created right here. But if you look at the candle bodies, and we'll take a closer look at this, let's just come right in here. Okay. So I've just placed a 50% GAN box on here. And if you look at the candle bodies, they almost come to CE of this area between 62 and 79% retracement. Yes, it does wick down deeper, but that's a very nice price delivery into the middle of optimal trade entry. So here's my fib. I'm going to go to the settings. Okay. So these are the standard settings that I have. 0 to 1 creating the framework, 0.5 equilibrium, and then your optimal trade entry setting, 62, 79% retracement. Okay. Down here I have all my projections. So I'm going to start off with 0.5. We have 1, 1.5, and 2. Okay, so depending on what time frame we're looking at, depends on how likely price is going to go to these settings right here, which is basically half a standard deviation of the range you created with your fib. This is one full standard deviation, and so on. Okay, so these are the settings that I have. Alright, so we've created this range with our fib using this swing high after it takes out sell side liquidity. Sorry, swing low, and then this swing high. We want to know how far price is going to reach above this range and move into the next PD array. The fib tool is just a PD array tool. So you have your premium and then you have your discount. So if we take this, price moves up, almost gets to the halfway mark, comes back down. Okay, so if this is the next PD array, which is all these projections is talking about the next PD array. Price almost gets to equilibrium, comes back down into the discount, and then starts reaching up for this projection. And then we get that right here into London. We'll take a look at a few more examples. Okay, as we move forward, we came up above equilibrium. All right, so we created this swing high. So we'll just mark this out. Right, we got a point of interest here. Okay, so we have buy stops, buy side liquidity sitting above here. We come back below equilibrium. All right, we create this swing low. We make this swing high. Okay, this is right in this New York kill zone. Okay, price quickly runs away. We have optimal trade entry into the 79% retracement. Okay, we do get a very deep retracement here. And now we're looking how far above this range is price willing to go. Okay, we know we have buy stops in up here, which that matches with price could reach to this one deviation or one fib projection above here. Okay, so in this session we don't get it. We don't even get to 0.5, but as we move forward, okay, we do get it in the next London session. Let me just tighten this up a little bit. Okay, and now look what we have here. Okay, so here's our projections, and if you look at two fib projections above this range that was created in this kill zone, we get that 2 days later with CPI, and that hits perfectly at the top of that wick. Okay. We've taken buy side liquidity out 2 days later in this session. All right. So when we're looking at the New York kill zone again, here we have a swing low. That's 7 to 10 o'clock New York kill zone. We have a swing low, so we'll mark our fib. Okay, we've created a swing high, and this is even better because we have equal highs, so we know we're gonna come up above those equal highs. And because we've been hanging out below equilibrium, we came above, we just went down below. Now we're looking for price to start making its move up into the premium part of this range. Okay, so our bullish, our narrative is bullish. That's going to be that's our bias based off of price action so far that I gave you. Okay, so how far above this range is price likely to go? Okay, well, we have our buy stop sitting right here, so we reach that with this, and then New York finishes out before the day is closed with one fib projection above the range we created. Okay, right there. Asia consolidates, London consolidates, and then we start getting volatility right before CPI, and we have our CPI data release, and we get this huge amount of volatility. But what do we get? We have this 2 fib projection, which price runs up into that multiple times, and then our one from this previous range that was created, and we see price touches into that area. So these ranges that we create, again, these are just projections to the next PD array, and this gives you confluence. When you put context behind all this, it allows you to make educated and specific targets based off the context that you have when placing your fib. And so the context for all of this is that, as you can see here, here's our equilibrium line. Okay, look at price hangs out right around there, dips below, comes back, dips just below it, and now we start moving up and away from equilibrium. So the context is we're moving into a premium part of the PD array, so we're looking for where are our targets that are going to be when we set up to go long. Where are they going to end up at? And this is one way to use that. Here we created a swing low above equilibrium, and you can see that we start creating higher lows as price wants to move up into the premium part of this PD array. Okay, so again, we're still looking for ways that we can use the fib tool to give us projections on where price is going to go. A lot of this is staying kind of within a range. And then we have one more time to where price takes us below equilibrium after it's gathered all this in this premium part. Okay, and this is the fib tool on the higher time frame, and I'm just showing you. And look at this. Look where we get price, where it touches, comes down, consolidates, and then starts to move below. Okay, so now we're back below equilibrium. Price hangs out in discount, and then it's going to take us up into premium again. Okay, so now that I know that price has gone below equilibrium into discount, Okay. So we have this swing low that was created just at the end of as New York lunch is finishing up into the PM sesh. Okay, it comes down into this optimal trade entry. And then we're looking for the next range of where price is going to want to go. And we get a nice 1.5 fib projection up to here. Okay, but remember we have all this unbalanced area back here, and we have buy stops resting above here. You can add projections as many as you need. We have this that takes us right above here. And what do we get? We get just about to halfway. Okay, so 3.5. This would be the midpoint of here. And then price comes back down to 3 and then consolidates right along here. So these are just tools, again, to help you. And again, we know that we dip back down into below equilibrium. So because we're in a discount, we're looking for setups to go long. I'm going to take this swing low and just place it right here. Okay, so we had a little bit of consolidation right here, and we start to expand out of it. We get the lunch pullback after London close, going into lunch, comes back down into optimal trade entry, and we get 1.5. And the day finishes out at 1.5. And then when we look back, okay, if here's our range, what do we have above this range that we're looking to get? Okay, so we have buy stops above here. It's almost 1, so that could get it. 1 would take us right into this order block. And then we have all this SIBI. So on a higher time frame, on a 1 hour, this is going to be all open, unbalanced. Okay, and we get right into a part of this SIBI, consolidate, and then we finish balancing the rest of the SIBI over here. And we get just above 4. Okay, here we have the 5-minute chart. This green line, okay, that was our swing high. So we have now broke above the swing high, taking out the buy side liquidity. Okay. We have New York kill zone. We have a swing low formed right here. We have a relative equal highs forming a swing high. Price trades back down into this optimal trade entry, into this 5-minute order block. Get a nice run up to this 0.5 fib projection. We have a lunchtime retracement, and then we run up perfectly to this 1 fib projection. Then we have price moves back down, and because we've taken buy side liquidity we start to move down, we go below it, and we take buy side liquidity one more time. Okay, and we get a nice move up in here, and then we sold off. So I hope that this was helpful. It helped you learn how to use the fib tool, where to place it, why you're placing it, that this is just another form of giving you a range or a PD array and what you're looking for as far as bringing context and confluence to the fib projections.